Volatility hits Dalal Street. Nifty sits below 8,000 in intraday trade before a late recovery dulls some of that pain. Sensex drops over 100 points to close just under 26,600.
The rupee hits a 20-month low as it breaks past 64 to the dollar. A sell-off in European government bonds also triggers a sharp spike in Indian bond yields.
Global crude prices cool off after hitting a 2015 high overnight. The sell-off in the European markets continue. French CAC down by over 2%. US markets stuck in a narrow range.
We have therefore decided to refer this matter as well as a few other tax issues, which are essentially legacy issues, to a committee headed by Justice A.P. Shah, the chairman of
Finance
the Law Commission.
Minister tells Rajya Sabha that the government has set up a high-level panel to handle legacy issues on the taxation front. Adds that any further developments on the levy of minimum alternate tax on foreign portfolio investors will be referred to this panel.
Hero MotoCorp continues to fishtail for the second quarter running. Fourth quarter net profit falls more than expected to 476 crores. Margins fall victim to higher ad spends.
The Bombay High Court suggests that warring Yes Bank promoters Rana Kapoor and Madhu Kapoor should try to reach an amicable reconciliation. Suggests both parties reduce their stake in the bank to a level that eliminates their right to nominate a director, but that's just a suggestion.
United Kingdom goes to polls in an election that has widely been touted as too close to call. A hung parliament looks a near certainty as opinion polls still put Conservative leader and incumbent UK Prime Minister David Cameron neck to neck with Labour leader Ed Miliband.
On the hour, America's oldest two-wheeler maker, Indian Motorcycles, rides into India, launches 2 motorcycles, announces plans of ramping up its investments over the next 3 to 5 years.
We take you inside Zen Technologies, a company that's banking on its expertise in simulation training to make an explosive mark in the Indian defense sector.
And CNBC TV 18 continues its travel through rural Uttar Pradesh to find out what sugar millers and sugarcane farmers are so bitter about.
This is a market which is in a near term and in an extremely near term in a cyclical bear market within a structural bull market.
As far as the bond yields are concerned, in the US we do expect bond yields to rise.
Opening bell goes, and the first tick is a little negative for the Nifty. 0.5%. Actually, it started off with 0.25%, and in actually 2 seconds went on to a 0.6%.
So I think it's not a buy time, Lata, for many reasons. And I think the first fundamental reason is that things got to change. It's not just a sporadic reaction that a sell-off has happened.
It reaffirms that CNBC TV 18 is the undisputed leader in business markets. Our market share stands at 62%, which is more than double.
Looking all right. I think the first quarter may be a little subdued, but we should see pickup in demand happening on the back of what we hope is a good monsoon.
The company has delivered 198 crore in terms of the bottom line. That would be a growth of close to about 20 to 21%.
It's a volatile session on Dalal Street. Nifty trading in the red around that 80-50 mark. Bank Nifty leads the fall down almost 2% from the top.
Look at what happened with individual stocks. So let me start off with the losers first. No prizes for guessing this one. The banks: Bank of Baroda, Kotak Mahindra Bank, Yes Bank, PNB, Axis. You throw a dart in the dark and you would have got it right if you had shorted the banking names.
That sums it all for you. A bloodbath for our markets. The bears have maintained their firm grip on the Dalal Street. There was continued selling by FIIs even today, coupled with a weak rupee and a sell-off in the global markets. All of that led to the Nifty falling below 8,000 mark in intraday trade today, only to end the day just slightly above that at 8,050. The Sensex, that cracked close to 150 points to end the day at 26,599. Banking and mid-cap stocks were the worst hit. The only sector which posted gains was the IT sector, and that's on the back of a weakening rupee. Anand Singhana joining us to wrap up today's trading action. Anand, another disappointing day for the Indian markets, but this is part of a larger story, the global sell-off.
Well, the day was really bad. It was volatile, but what was interesting was that every rally was being sold into. The last rally, which was once the Nifty went below 8,000, didn't get sold into because there was not enough time. So the test for that would be tomorrow morning. But really, the Nifty broke 8,000 in late trade. So from 9,000 something, we have seen 7,000 something now. There was a bit of short covering in the last 30 minutes, but the test would be tomorrow. The rupee hit a fresh 20-month low. That was a big break on sentiment. And of course, the bank Nifty suffered a bit of a mini collapse today, breaking below the 200-day moving average. Let's talk about some of the stocks that led the market down. And really, it's banks on top yet again. We had Bank of Baroda down 5%, Kotak was down 3%, Axis was down 3%. Some of the other bank stocks which fell included ICICI, that was down about 2.5%. Yes Bank was down 3%, PNB was down 2.5%. A lot of banks and NBFCs fell in trade today. Apart from that, this is a list of stocks which worried a lot of people. Maruti in particular has started to decline. That was the most outperforming stock, and today it was down 2.5%. ONGC was down 2.5%, Tata Motors as well, down about 2%. On the gaining side, IT stocks looked really strong because of valuations and because of currency factors. So TCS was up 3%, and even Infosys and Wipro did well. ITC was up 1.5%, that looked good, and Bajaj Auto, one stock which has fallen quite a bit, saw some bargain buying. Outside the index, it's this set of stocks which is really worrying a lot of people. The F&O stocks, the high pedigree stocks, PFC was down 7%, REC was down 6%, Wokhart after 10% fall yesterday was down 7%, and purely from the mid-cap space, the stocks that fell were the high beta ones. MEP Infra, the new listing, was down about 12%, IFCI down 7%, and HCC was down about 5%. So we've broken 8,000 intraday now. The key is, will the Nifty settle below 8,000 before any bounce, or have we made a near-term bottom? That's something that we'll come to know over the next few days.
Government, that is the Indian government, which has been on the back foot for quite some time now on the MAT issue, has decided to form a high-level committee headed by the Law Commission head AP Shah to look into all the legacy tax issues, especially around direct taxes. This was announced by the Finance Minister Arun Jaitley in the Rajya Sabha today while replying on the finance bill.
In view of a ruling given by the Authority for Advanced Rulings in 2012, it was found not possible to provide a retrospective exemption for a prior period. Perhaps this matter should have been addressed in 2012 itself and resolved one way. The affected party has subsequently gone to the Supreme Court, and the matter is pending in the Apex Court. Thus, it may be seen that as soon as the problem was brought to our notice, we resolved the issue with immediate effect as far as the prospective period is concerned. Recently, the affected party moved the Supreme Court for an early hearing. On behalf of the government, it was conveyed to the Supreme Court that the government has no objection to an early hearing, and we were also keen to a final settlement of the issue for a prior period by the Supreme Court. It is expected that the Supreme Court would fix an early hearing in this state. In the meantime, I have received a large number of representations on this whole issue. We have therefore decided to refer this matter as well as a few other tax issues, which are essentially legacy issues, to a committee headed by Justice AP Shah, the chairman of the Law Commission. The committee is requested to give its recommendations on the specific issues of MAT on FIIs expeditiously. The government will consider the recommendations of the committee and take an appropriate decision as early as possible.
Finance Minister saying this issue should have been resolved back in 2012. Prospective measures have been taken, but FIs continue to make representations to the government, and that's why you're seeing this high-level committee being set up. Sapna Das now joining us with the details. Sapna, we don't know the terms of reference yet as far as this committee goes, headed by AP Shah. What is it likely to do? What are you picking up from your sources?
Well, definitely it's going to look at the direct tax laws in a broad fashion rather than looking at very specific instances. On this particular aspect, the most important point that the finance minister has flagged off is that all fresh representations that they're receiving on the MAT issue, despite the prospective exemptions given to the foreign institutional investors on the MAT, this matter will also be referred. So the matter as a whole will be referred, despite the fact that the government is also waiting for an expeditious hearing from the Supreme Court on the Castleton case. So that is one. There are a few other legacy issues also which the finance minister has spoken about, but it's unlikely that very specific cases will be discussed by the committee. It's basically going to look at the fact whether the interpretation of the direct tax laws has been correct or not. So that is where the main that's what the main job of the committee is going to be. Obviously, once the recommendations are ready, the government will move speedily ahead on that front. But the point here also is that since the FM has already indicated that because of the fact that the Castleton case hearing is still awaiting Supreme Court's judgment, and the AAR had already given a ruling regarding that case. Hence, the government was not able to give any retrospective exemption to foreign institutional investors on MAT. So how will that be resolved once this committee's recommendations come up? So, there is still a question mark, and we'll have to wait for the exact terms of reference to be notified, and this is going to happen very soon. Probably as early as tomorrow, the terms of reference with the new panel are going to be out. The other important element also is there's another existing high-level committee addressing tax grievances, also arising out of the retro tax amendment that had happened after the July budget, the first budget of the BJP government had set up this committee. That committee, as of now, is going to continue.
We actually have Mr. Jayansana joining us on the phone line, so let's get straight to it. Sir, good evening, and thank you so much for taking this call. The Finance Minister announcing in Rajya Sabha the setting up of this special panel. Can you give us any more details on to what will be the mandate of this panel? Why is this panel being set up?
Good evening. Very glad to be on the show and being able to clarify this whole MAT issue somewhat further. What I will say up front is that our position on this matter has been actually, I think, very explicit and very clear right from the outset. Mr. Das, who's the Revenue Secretary, clarified many of these matters, in fact, almost all of them, when he first spoke to the press, I think, almost 2 weeks ago. Subsequently, we had a conference call with many FIIs and market participants where we clarified matters again. And then, of course, as you must understand, Parliament is in session right now. And when Parliament is in session, we have to make sure that most of the policy discussions we have and the clarifications that we do have to be done in Parliament as well, which is what we've done, of course. So while we've been very clear right from the outset that we are dealing with all these matters prospectively, which is what we can do from a policy perspective, the retrospective matters are sub judice and are part of the judicial process, where, of course, our ability from a policy point of view to do anything is extremely limited. And there what we're trying to do is to expedite these matters as quickly as possible. Of course, that's what we've tried to do with the case that's in the Supreme Court right now. And even as that is in the Supreme Court right now, what we're trying to do, as the Honorable Finance Minister said in Parliament today, which he had also written in the Financial Times not so long ago, that a committee would be put together, and this committee will be led by Justice Shah. He's going to look into all these matters related to these legacy tax cases and try and ascertain whether it's possible for us to do any kind of intervention on the policy side, or whether there is a way, even from a judicial perspective, to try and expedite all these matters. And so that's what the Honorable Finance Minister announced today.
Mr. Sinha, if I could just come in here. Good evening and thanks for joining us here again. I understand Parliament is on. We've heard about this high-level committee being set up. Could you share with us what the terms of reference are? Is this panel going to look mainly, for example, at direct taxation? The government stance, the finance minister stance, you have said this repeatedly as well, that you will not touch upon any retrospective cases. So I just want to try and understand that when this committee is going to be looking at these retrospective cases, what is the idea? Because you provided a prospective relief. You have said there is relief available under the double taxation avoidance agreements. So what exactly is this committee really supposed to do?
No, this is the terms of reference are, I think, quite clear. The idea of the committee is to be able to do a review largely from a judicial perspective as to what can be done to expedite and resolve all of these tax cases as soon as possible. Now, what does that mean? What that means is, if indeed there are ways in which the rulings can be tightly and narrowly interpreted to be able to resolve them quickly, that's one aspect of it. If there are judicial processes that can be expedited, or there are things that we can do to make things easier, to ensure that the process is expeditiously resolved, we will certainly look at that. And then the third aspect we could consider is whether there are in fact any policy interventions that are possible that will enable us to resolve these judicial matters quickly. Those are the kinds of issues that the committee is going to get into. But again, as the Honorable Finance Minister said in the Rajya Sabha today, we very much believe in a simple, predictable, fair tax regime. These are legacy matters that we've inherited, where there was in fact a ruling from the authority which we had to respect, because it was in fact a judicial process that the ruling initiates. And so we have to, obviously, recognizing that the executive branch of government has to work under the direction of the judicial branch when in fact it is a judicial proceeding, and recognizing our constitutional responsibilities, we have tried to resolve this as expeditiously as possible.
Mr. Sinha, sir, if I could just get a small clarification here, sir. Since you are saying that this new panel will also be looking at the possibility of expediting the judicial process, how should one understand? Now, will these two processes happen simultaneously? Because there are already ongoing cases, the Supreme Court case that you referred to, the Aberdeen case, and a couple of other cases here in the Bombay High Court. So how will this panel then sort of, look at the ongoing judicial and the legal, processes which are already underway in different courts?
Well, we've already shown that in the Supreme Court case, where the Attorney General said that it should be heard as quickly as possible. We expressed the government's position on it, and hopefully that will result in the court bringing up this case as quickly as possible. So if those kinds of interventions are possible as far as the judicial matters are concerned, we will naturally endeavor to be able to do that.
Mr. Sinha, is this panel going to be looking at specific cases, not just at the Act, but specific cases? For example, there's the high-profile cane tax. Let's talk about that. Or the Nokia case, something that, we've seen, senior cabinet members also talk about. Is that also a possibility?
Yes, we are going to be looking at all of the legacy cases and trying to resolve them, as I said, as quickly and as expeditiously and as fairly as possible.
Have you prioritized what would be the more important tax legacy cases that this panel should first look at?
That is for the committee to decide. Obviously, there are very many important cases that are pending. Many of them also revolve around very substantial and very important matters that, in fact, impinge on both India's overall tax regime, our sovereignty in terms of certain of these cases, and are very, very deeply significant, both from an economic perspective and from a tax perspective. So these are not straightforward matters in most cases. These are very complicated matters, and as I said, they intertwine judicial aspects, parliamentary sovereignty and the conduct of what Parliament can do through taxes, obviously economic consequences. So as I'm trying to explain to you, these are not simple, straightforward matters. If they were, they would have been taken care of a long time ago. So we are trying to figure out what is the best way, and which is why this committee can play such an important role to go through all of these very complicated cases to understand, again, what is the right combination of things we can do from a judicial perspective, from a policy perspective, to be able to resolve these.
Sir, our last question to you. It does seem, and I don't know if I'm interpreting this right or not, but it does seem that the government has a slightly more conciliatory approach to the scheme of things now, which perhaps would be, really welcomed by market participants. But that apart,
no, I would not agree with that at all. As I've said all along, we have been following very much a consistent process through all of this. Because we believe, in having a simple, predictable, fair tax regime, prospectively in the budget itself, we've resolved it and we've made it very clear. And then, of course, after the budget was presented in Parliament, we got several representations on further clarifications that were required, which are now in the finance bill. So, we are, in fact, very open. We are very responsive to all good suggestions, and we are trying to, incorporate those as best as we can. But again, which I would request all market participants to recognize, is that there are limitations and there are responsibilities which are constitutional responsibilities that we have in terms of how we can intervene and how we can resolve some of these matters. And whether it is India, whether it's the United States, whether it's the UK, Singapore, any important market, it's very important for all market participants to know that we have a sovereign that is rule-based, that is based on the law. And I think that should in fact give people a lot of confidence that we are proceeding in a very deliberate, measured manner. We made our objectives very clear, but we are respecting the law, we are respecting the process, and we are trying to be as open and transparent about it as possible. And I think that should give people a lot of confidence and comfort. We fully understand all of these issues.
Oh, sir, I absolutely get that. Just a quick question, last question from my end. As this panel is set up and starts looking at some of these extremely complex issues, what about the notices that were still being sent out to portfolio investors? Is that a separate process? Will notices keep being sent out?
See, that is, in fact, you must understand, that is our constitutional responsibility. When a court says, when the authority on advance ruling says that tax is liable, we are constitutionally obligated to follow what the court is asking us to do. And so we have to do that. That is required. Now, it is absolutely then, the responsibility, or in fact it is the right that the assessee has at that point, the taxpayer has at that point, to challenge that. We have to follow through on our constitutional responsibility, and then the taxpayer has to challenge that and say, as they are doing in the courts, that we don't agree with this. And that is exactly how a democratic, constitutional, law respecting government and a system works, and that's exactly how it's working.
Mr. Sinha, there was already a committee that had been set up earlier. Now we have a new committee that's coming up. Are the two of them going to work together?
I'm not sure which committee you're referring to. Because we've as Honorable Finance Minister said in Parliament today, we've just constituted the Shah committee that's going to look into these legacy cases. So I don't know which is the other committee that you're referring to.
All right,
thank you so much, Mr. Sinha, for joining us here on CNBC TV 18. We are also joined by the Revenue Secretary, Mr. Shantikanta Das. Thank you, Mr. Das, for joining us here on CNBC TV 18. We were just in conversation with the Minister of State for Finance, Mr. Jayant Sinha. He was telling us about this new panel that has been set up to expedite tax cases which have been inherited by this government, that these are all legacy issues. What I would like to begin by asking you, Mr. Das, is that we know about how the FIIs have been making all these representations to the government seeking retrospective exemption, which none of you have been in favor of. So can you tell me what will be the specific terms of reference for this panel, and which are some of the other high-profile cases this panel is going to look at outside of MAT?
First of all, let me mention, with reference to your query, you made a reference to two committees. Just now you made a reference to two committees.
Yes.
Now perhaps you are referring to the high-level committee which was announced in July 2014 budget with regard to this retrospective amendment that was done in respect of indirect transfers. You know, the cases like Vodafone, etc. Now, that committee deals with individual cases, new cases, fresh cases, cases which are already in litigation, in arbitration, or where action has been initiated. That is different. They are in various stages of judicial process. That committee was announced to deal with any new case or a fresh case coming up which is affected by this provision of retrospective amendment on indirect transfers. That committee was to deal with only such cases. Now, the committee which the Finance Minister has announced today, the detailed terms of reference of the committee will be issued very shortly. But one issue which is immediately being referred to that committee is the levy of MAT on FIIs. Now, with regard to the levy of MAT on FIIs, when the budget preparation, that whole process was on, this difficulty of FIIs were brought to the notice of the government. The government provided them exemption with immediate effect. Now, with immediate effect means it has effect for the future period. It has a prospective effect. The government it was not possible for the government to provide a retrospective exemption because there was a ruling given by the authority for advance ruling which was in favor of the revenue and which said that, MAT is liable. I mean, they have to pay the MAT. So, therefore, it was not possible for the government to provide retrospective exemption. Now, thereafter, number of representations have been received in the Finance Ministry. Number of representations have been made to the Finance Minister. Based on all these representations and after, examining the whole issue, the government has taken two decisions. Number one, when the affected company moved the Supreme Court about a week ago for early hearing, from government side, it was conveyed that government has no objection for an early hearing because the government is also interested and keen that the Supreme Court decides and settles this issue. This issue will have, therefore, effect for the prior period also. Now, the second thing that has been done by the government is what the Finance Minister has announced today. A committee headed by Justice A.P. Shah, who is currently the chairman of the Law Commission. This committee will go into the policy aspects, go into the judicial aspects of this levy of MAT on the FIIs. And the committee will be requested to give its recommendation as quickly as possible. Once the recommendations are received in the government will consider and take a decision in the matter.
Sir, just a quick clarification then. Since this new committee has now been set up and we also have certain parallel legal processes that have been initiated, certain portfolio investors challenging the notices in court. What happens now? What is the government standpoint? The last numbers that we were aware of was the total demand raise, I think, was around 600 crore rupees, and about 60 odd notices had been sent out. Have more notices been sent out since then? And is the department going to continue with the process of sending out these tax notices, the claims?
You see, I don't have the statistics of the notices being issued because it is issued from various assessment jurisdictions. So I don't have the statistics of how many notices have been issued. But yes, so far as the cases where the assessments have been completed, there the tax liability is about 600 crores, which was informed in in reply to a question in the parliament. Now, with regard to issuance of new notices, etc., if a case is getting time barred, naturally the assessing officer will have to follow the due process of law, and to avoid that time barring, he has to probably issue the notice. But now the matter is referred to this committee headed by Justice A.P. Shah. So the government will wait for the recommendations of that committee, and after that the government will take a decision in the matter.
All right, so we'll leave it on that note. Thank you so much for your time, and thank you for clarifying.
Thank you. And may I also just add one more
Please,
sentence?
please, sir.
The statement which the finance minister made in the parliament today, in the Rajya Sabha today, the last paragraph of that statement, the concluding remarks of the finance minister is very important. The finance minister has reiterated the government's commitment to have certainty in taxation, to avoid retrospectivity in taxation, and the commitment of the government to provide an enabling environment for business and industry and for investors to operate in the Indian economy. So that these are not only reassuring words, these are words to which the government is committed. Thank you.
Okay.
Mr. Das, if I could just move a little away from taxation, since we have you on the channel, we're talking to you a day after we've seen crude prices touching 2015 highs. We've seen the rupee depreciation. Anything to worry about at all?
It's a spike of today. It's a spike. We have to see how it plays out in the coming days. The rupee depreciation is, there are complex factors. You cannot pinpoint one single reason for that. Some exporters, I am told, are feeling quite happy about it and quite satisfied because they feel that it will improve their earnings. But I think we'll have to see how it plays out because it is just a sudden spike, over last one day and particularly today. So we'll have to see how it plays out.
And the crude prices, we've seen a significant appreciation in that, while albeit they did come down a little today. Where will that leave the fisc? Any reason to worry at all? You had anyway increased excise duty in the past for petrol and diesel. If this trend continues, could you look at perhaps rolling back those excise duty highs? Could we see any action on the crude excise duty or customs duty, anything?
You see, we keep a watch on all these commodity prices. I mean, whether it is gold, whether it is crude. I mean, we keep a watch on all these movement of these international prices. And the crude prices, again, is a phenomenon which has just happened in the last few days. And again, we have to see how what is the overall trend. So we cannot take decision on the basis of what happens in a matter of 5 days, 6 days. So we'll have to see if there is an emerging trend. Based on emerging trends, the government would appropriately respond to particular situations.
All right, Mr. Das, we'll leave it on that note, sir. Thanks so much for your time this evening. That's the Revenue Secretary clarifying the all-important development, and a very important one really for the market. Let's see how it reacts. The government setting up this absolutely new panel to take care of a lot of taxation issues, including obviously the minimum alternate tax. But quickly moving on, CNBC TV 18 is #1, and we have the numbers to prove it. According to TAM data for week 15 to 18, CNBC TV 18 is clearly the market leader with 62% market share, which is more than twice ET Now's market share of 25%. We'd, of course, like to take this opportunity to thank all of you, all our viewers, for your continued support.